Hi students, today we will continue with basic accounting terminology. Okay, so we already saw few things. Now we will continue with part 2. First one we have stock. So in accounts we often use the word stock. What do you mean by stock? See, accounting will be based on calculating on a particular period. Okay, so it might be on the calendar year end or financial year end. Calendar year end we calculate on the December month, end of December, and financial year end we calculate from April to March. So that is last year April to this year March, we can tell. Okay, so that is financial year. Calendar year is Jan to December. Okay, so suppose if on a particular closing date we have few goods left over in our business, we call that as stock. So all the unused goods that is left over in our business organization, we call that as stock. First one. Okay, next we have income. So what is income basically? So it is nothing but whatever amount that has to be, you have to get it or you have already received it. Okay, amount receivable. What do you mean by that? It is future. In future you are going to receive that amount or the amounts already received. Okay, as earnings from interest or dividend or commission, etc. So whatever profit you are getting out of the sale of goods, you are selling some goods and for that you are getting some interest, dividend or commission, we call that amount as income. Okay, so what is expense? So whatever amount that you have paid or incurred for the purchase or sale of goods for your organization. Okay, so that amount you might have spent for some specific purpose for the business. We call that amount as expense. Clear? Next we have solvency. So that is a new term, right? Solvency is the capability of a person or an enterprise to pay the debts. So here debts means the amount you have borrowed for the business. So to run a business you might be getting or borrowing some amount, right? Yes. So you have to be in a position to repay that amount back. Okay, so whatever amount you are borrowing from, maybe it might be from third party or bank or friends or partners, whatever the sources may be, the amount borrowed for the business has to be repaid back. Correct? If you are able to repay it back, it means you are a solvent, or that is the term we call it as solvency. If suppose a person is not able to pay his amount borrowed, loan amount borrowed, if suppose he is not able to pay, we call them as insolvent or insolvency. Okay, so debts means nothing but your repayable amounts. Clear? Next we have asset. So what is asset? Any physical thing or right own that has a monetary value, any physical thing. Okay, so for example, in an organization we can take furniture, all furnitures, land, building, cash. Okay, so everything has a money value, monetary value. Correct? So that we call it as asset. Okay. And few things we have like amount invested, goodwill. We'll see all those things in later chapters. Okay, so just try to understand the basic concepts here. Asset means any physical thing or right owned that has a money value for the organization. Okay, so that we call it as asset. So, and what is liability? Liability is nothing but any obligations, means anything the business has to repay or has to do that job in future. We call that as liability. Anything you are owed, you have to do it in future or you have to repay in future. That we call it as liability. Okay, so asset means all the properties that can be converted into money or has money value, we call it as asset. Liability, anything that has to be repaid or that has to be done, we call it as liability. Next we have debtor. Who is a debtor? A debtor is a person who receives benefit without giving money or money's worth immediately. Okay, so for example, if you are doing some business related to furniture, for example, we will say, okay, so few persons, a person is getting things from you. He is buying furniture from you and telling, now I will buy the goods or products, but I'll make the payment after 1 month or 2 months. Okay, so in such cases, he is the person who is receiving the product, but the money may be paid immediately or may not be paid immediately. But he is liable. In future, he has to pay that amount, correct? Because he has purchased goods from you and he has to pay that amount. He is liable to pay that amount. So such persons we call them as debtor, who will buy the goods from you and pay it in future or immediately also he can pay. So such persons we call them as debtor. Okay, next we have creditors. Creditors are nothing but a person who gives a benefit without receiving money or money's worth immediately but to claim in future. So in this case, as a business owner, you will be buying the products from others. Okay, so you will be purchasing goods from other persons. Sometimes you might pay the amount immediately or sometimes you might ask them time. Give me some time, I will pay it in future. So in this case, you are a creditor. You are receiving the benefit from others, but you might pay immediately or may not pay immediately. Okay. Next we have depreciation. It refers to the gradual reduction in the value of fixed asset due to usage and passage of time. So depreciation is nothing but, for example, now we have benches in school, right? Correct. So first year when the school benches are bought, it will be very new. When it has been used for a period of 2 years, 3 years, there will be some scratches, names might have been written on the bench, something, the value of the bench will get reduced. Correct. So after 5 years, think there might be some hole. Correct. So similarly, when a product has been, some goods, some assets has been used continuously for some time, the value of that asset gets reduced. That we call it as depreciation here. Yes. Next we have bad debts. Bad debts are nothing but, we saw, right, debtors. They will be getting the goods from you without paying money. So you will believe that in future he will pay to me. Suppose in some cases he will be in a situation that he cannot pay that amount. He will say, sorry, I thought I will pay you the money and bought the goods, but now I cannot pay you the full amount. For example, he might have got goods for 80,000 worth. Okay, and he will say only 75,000 I will repay you back. 5,000 I cannot repay. I don't have money. Okay, so such amounts we call as bad debts, which cannot be recovered at all. Okay, so that we call it as bad debts. Clear? So if you have any doubts, you can get back to me. Thank you.